and welcome to Speedtalks, podcast about everything tech in the financial industry. My name is Basia Bednarczyk, and in this episode, I will be discussing the latest trends in the banking and financial industry. We are only halfway through the year, but our team has already attended more than 15 events related to financial and banking services. We've been to conferences in Romania, Poland, the UK, Finland, Belgium, and even the Netherlands. The main purpose of these events for us is networking, discussions, meeting new people, and of course, gaining new perspectives. We've noticed that regardless of conferences or the country, some topics are frequently discussed. What are the people working in the industry most interested in? And what they're talking about right now? That's what I will tell you about in this episode. Let's get into it. First up, of course, is open banking. For those who are not really in the financial industry, open banking is a system that allows customers and businesses to share their financial data with third parties. The aim of open banking is actually to increase competitiveness and innovation in the financial sector while maintaining the security of data transferred and the certainty that everything is done legally. The main challenge currently faced by financial players is to actually take open banking to the next level. This means moving beyond implementation and focusing on broader integration and widespread adoption. It's worth mentioning that open banking is strictly regulated by law. This ensures that customer data is secure and only used with explicit consent. In Europe, for example, these regulations are set out in PSD2, Payment Services Directive 2. PSD2 is the Payment Services Directive in EU, which aims to facilitate, standardize, and secure payments across Union. A third version of this directive, PSD3, is currently under development. For this reason, the topic is very trendy in the industry. The combination of open banking and Gen AI is also mentioned a lot at the events. This combination allows banks to improve their services and efficiency and actually improve the customer experience. Banks recognize the transformative value of Gen AI. According to EY's data, the combination allows for enabling greater productivity by automating sales-related activities, enhancing existing technological capabilities, and for sure, accelerating broader innovation. However, this synergy requires a clear vision, the ability to implement changes, familiarity with the right technologies, specific skills, and of course, human resources. It's a very complex process, which is why institutions are initially focusing on back office automations. What comes next? We shall see. Speaking of artificial intelligence, this is probably the most common topic at every conference. However, contrary to a common internet narrative, AI is not being presented as a replacement for humans, but as a support for them in certain areas. In today's world full of fake news and uncertainty, clients prefer real human contact. We shouldn't replace ourselves with machines, but rather let them help us. And that's exactly what's being discussed in the financial industry. One example of the use of AI in the modern world is predictive AI. Predictive AI refers to the application of artificial intelligence techniques to actually predict future events or trends based on historical or current data. This technology is widely used in various industries for forecasting, risk assessment, and decision-making. For example, in medical diagnostics, it's used for early detection of disease or predicting of the treatment's outcomes. Key topics also include the importance of data quality for training AI models and its impact on accuracy and performance. In the end, it's up to us what artificial intelligence learns. Fun fact, there's also voices at the conferences talking about the growing disappointment with AI projects. This is mainly due to the high costs resulting from implementing AI solutions and actually the lack of visible benefits. The craze for artificial intelligence and implementing it without a sensible plan is starting to take its toll. However, despite the fears and initial setbacks associated with AI solutions, the conversation is still invariably around AI's potential, whether it's because, in some cases, artificial intelligence is starting to deliver the expected results, or perhaps it's because speculative bubbles take a long time to burst. We'll probably find out soon enough. Another hot topic is payments and digital money. I have yet to attend a conference where the topic of CBDCs has not come up. Central bank digital currencies is a new form of money that exists only digitally. Instead of printing money, the central bank issues widely accessible digital coins. How cool is that? It's simplifying digital transactions and transfers as well. The central bank's digital currency may affect the way people pay for goods and services and the role of banks and other payment companies. Although its introduction is expected in 2028, I think banks should start preparing now. The European Central Bank points to three main benefits of digital euro. First, it would strengthen Europe by promoting monetary sovereignty and making payment landscape more resilient to non-European providers. Second, they say it would enable financial inclusion and create a common European payment system for all EU citizens. Thirdly, they say it would be free to end users with beneficial features such as cash-like privacy. Speaking of payments, the industry continues to see the impact of COVID-19, which has caused a shift in payment habits towards digital, contactless, and e-commerce payments. Customers have taken a liking to the convenience that digital payments bring. On an interesting note, after a period of uncertainty, cryptocurrencies developed by private or informal organizations like, for example, Bitcoin, have again seen significant development and value growth. So they are again attracting more interest from those in the industry. But it remains to be seen how long it will last this time. Of course, security and building customer trust are still mentioned at the conference. Financial institutions know that trust is a crucial factor for success. That's why a lot of emphasis is placed on fraud and how to deal with it. There's a lot of talk about how security, liquidity, integration, and personalized experience are essential for customers. Hence the popularity of embedded finance. Embedded finance is a term for integration of banking and financial services with non-financial applications or services. Customers want financial products and services that are embedded in their daily activities. Embedded finance offers both banks and non-financial brands the opportunity to actually provide a seamless or a smooth customer experience. Customers and business increasingly expect financial products and services to be tightly integrated into their day-to-day activities. For example, being able to pay for parking or the motorway in the banking app. Fundamentally, these integrated experiences go beyond digital financial services and instead bring us closer to the next revolution in finance. Subscription payment also come up frequently at the conferences. I recently heard that payments research shows that 80% of those surveyed in last year have paid for their monthly bill in a subscription format. Are you guys doing that? The lesson for merchants is that once customers see how easy and secure it is to manage payments via subscription services, most seem happy to abandon traditional payments methods. Speaking of customer experience and personalization, one of the biggest cross-sector trends is mass personalisation. I've noticed that no matter what industry I talk to, is it banks, financial institutions, or insurance companies, they all mention the importance of personalization in their services. There's a strong focus on interaction channels, customer paths, and engagement. The different channels through which customers interact with financial services are tested, and the importance of mapping and improving customer path is discussed. The topic of real-time data analytics, cloud infrastructure, and AI as key enablers for developing and improving customer experience emerged at many conferences. Cross-sector collaboration, for example, value-added services, so-called VAS, between banks and other services providers, such as the ability to buy public transport ticket via the bank's app, or pay for the parking, or even take out your insurance. You can hear more about this in episode 1 of our podcast, where Michael discusses it in more detail. Finally, I want to mention the topic of regulation in the financial industry. This includes KYC, Know Your Customer, AML, Anti-Money Laundering, and the upcoming AI Act that everyone's really waiting for. KYC and AML are crucial in the banking sector, giving the potential risk of fraud, money laundering, or other illegal activities. KYC and AML play a vital role in protecting companies and financial institutions. The conferences also cover regulations and technology standards such as ISO 20022. This became a mandatory standard in 2019 with an initial cover from MT by March 2023 and a transition to native messaging by the end of 2025. Because of this, banks and other payment processors around the world are already at the advanced stage of implementing ISO 20022. Believe me, I could go on for hours about trends in the industry and go into more depth of each of the issues, but I really don't think we have time for that today. Still, if you want to learn more about trends in the banking and financial industry, we'll be talking more about it in the future episodes of our podcast. But if you would rather read about it, we'll provide some articles relating to the topics covered in the descriptions of the episode. Hope you enjoyed. See you next time.